Welcome back. Now our top line story. Gold is back in the spotlight after seemingly plateauing at about $2,400 US per ounce for several months. Bullion prices are rising again. Yesterday, the spot price of gold touched $2,483.73 US per ounce. That's its highest price ever. To take a closer look at the surging price of bullion, we're joined by a featured guest of the morning, Colin Cieszynski. Colin is Chief Market Strategist at SIA Wealth Management. Colin, thanks a lot for joining us. There seem to be several factors weighing in on the rally in gold. Where do you think the primary strength is coming from, the primary upward influence on the price?
Absolutely. Thanks, Paul. There's a lot going on with gold right now. Gold historically has been seen as a store of value, as a hedge against a number of things, a hedge against risk, a hedge against inflation. And there's so many things that have been happening this summer. They've all kind of come together for gold at once. So we'll start with the monetary side, the US dollar. We've had a lot of talk lately, pick up again, about how many interest rate cuts there might be in the United States this year. People were saying 3 earlier in the year, then the Fed kind of went to 1, and now after last week's U.S. inflation report, people have gone back to, well, maybe there could be 2 rate cuts and maybe we get one this summer. So that has lit a fire underneath gold, and is probably one of the main drivers of this recent breakout. I mean, we had a great start to the year, nice solid consolidation at a higher level, and now gold is breaking out again. So that would be one of the catalysts. Certainly another one is political volatility. We've seen over the last month a number of surprise developments in election campaigns, both in Europe and obviously in the United States as well. And moving forward, there's certainly quite a bit of uncertainty and volatility around elections in the United States over the upcoming campaign. And then the other piece is inflation. Gold is historically a hedge against inflation, and there's some question as to whether or not inflation has gone away. Last week's U.S. consumer report looked good for inflation, but then this morning we had the European Central Bank saying, well, we cut rates last month, we're one and done, we're going on the pause for a while because inflation hasn't come down as much as we would like. So there's still a lot of questions around inflation, and if somehow inflation started to ramp up again, then that could be a catalyst for gold as well.
Why don't we zero in on the relationship that you see between interest rates and the direction of interest rates and the price of gold? We often hear, and you've just referenced it, that when inflation is high or rising, and therefore interest rates are either rising or expected to rise, that's a good environment for gold, because gold is an inflation hedge. It's a store of value when inflation is eating away at the value of other assets. By contrast, we now hear that with rates expected to come down, that's a positive environment for gold, because gold is a non-interest-bearing asset, and it looks better by comparison to interest-bearing assets like bonds, where the yields are expected to come down. How do we sort out this difference? How do we sort out this relationship between gold and interest rates?
So with interest rates, the way that always comes through, I look at it is through currency, and I see gold is the world's premier hard asset and hard currency, and it trades. It's the natural nemesis of the U.S. dollar, which is the world's premier paper currency. But that also can extend through to the Canadian dollar or the yen or other types of paper money. And it's actually quite intriguing when we look at the yen this year, because you see gold and the yen used to be the stores of value, the places people would go in times of fear. And that relationship with the yen broke a few years ago. And in particular this year, we're in an interesting situation where we have gold going up and the yen going down. And so the value of the yen has decreased significantly compared to gold. So that's a good example. So that's one of the things we do run into, is anything that erodes the value of paper money is bullish for gold. And some people even say that gold actually is just flat and everything else trades around it.
What are your thoughts on the gold equities? How should they move when gold prices move up? They should move up, of course, but they very often lag the price of the metal.
That's correct. Now, when we do look at our relative strength rankings, we have seen that where we measure the relative performance of stocks in Canada and the United States and other places and other asset classes against each other, the gold stocks within the SIA relative strength rankings have moved up quite significantly. And in fact, we have in some of our Canadian reports, we have two gold stocks in our which have been Kinross, which is one that we hold in our portfolios, and Agnico Eagle, also one that's in some of our portfolios, as have basically migrated up into the top 5 out of Canadian stocks. It's been so we actually are on a relative basis seeing a lot of strength in gold stocks recently, and that's been driven by the higher gold price.
Okay, last question. Do you think this rally in the metal, gold, has legs? Will we test 2,500? Will we get beyond 26 or 27?
So 2,500 certainly is looking quite interesting for the short term. I think of markets in terms of round numbers, and markets often get drawn to tests of big round numbers. We think of things like the Dow hitting 40,000 recently as an example, and others, S&P 5,000 and things like that. And so 2,500 for gold is a big round number that's just kind of been sitting out there for quite some time. And it certainly is within striking distance of that now. We had that great run in the early part of this year. We've had a long time, several months now, for gold to build a foundation for another move. And at this point, it looks like it's just starting to break out.